Hello and welcome. You're watching The Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal, and today we'll be answering your mutual fund portfolio queries. So just in case you're watching the show live and want any kind of financial strategy, be it for any financial goal, or maybe you have a loan on you for which you want to pay it off and want a financial strategy from our experts, all you have to do is just send across your question on our WhatsApp number. WhatsApp number is 865-797-4571. There's an email ID, themoneyshow@etnow.tv, where you can send across your queries and we will do your live financial planning on the show. And today, to answer all of your queries, I have with me Hemant Rustagi from Wise Invest. Hemant, good evening and welcome to the show. And let's begin, Hemant. We will take Arya's question. I don't have him on the phone line, I guess, but he's just 25 years old and has a mutual fund portfolio also. So he's investing 10,000 in Parag Parikh Flexi Cap, UTI Nifty 50 Index 7,000 rupees, Motilal Oswal Mid Cap 4,000, Quant Small Cap Fund 4,000 again, and wants your guidance, wants to accumulate almost 75 lakhs in 7 years. And is the fund selection okay? And are there any changes that he needs to make, or maybe diversify better? So Arya, congratulations! Just 25 years old, and you already have taken the first step towards your investment journey. So congratulations. I don't know if you have really done a deep homework for this fund selection or there's someone who's recommended, but Hemant, funds look fine. I mean, well diversified, even if it's the first step, assuming that Arya doesn't know much about investing per se, but look at the fund selection. I think congratulations to him. What will you say?
Absolutely, Kavita. I totally agree with you. I think a couple of good things. One, investing in equity fund, investing through SIP. And I think broadly, I would say the fund selection is good. The only one area where, even though he has clearly defined what the target is, ideally speaking, if he's investing through SIP in equity fund, the time horizon should be slightly longer. Maybe if he can add a couple of more years, I think that will be great. But considering that currently he is investing for 7 years, and if he continues his process of investment uninterruptedly, assuming 12% return, he should be able to build a corpus of around 32 lakhs. So clearly, I think there is going to be a shortfall. It's going to be maybe slightly less than half. So if the time horizon cannot be extended, then obviously he will have to almost double his SIP to do that. So, or if he can extend the time horizon by maybe 3 years or so, he should be able to kind of reach somewhere near closer to his goal. As far as the funds are concerned, I think the categories are good. There is a flexi cap fund, Parag Parikh Flexi Cap, one of the best flexi cap fund. There is an index fund, I think perfect. Then there is a mid cap fund, Motilal Oswal, which I think in this category is one of the best fund. And there is also a small cap fund. I believe that considering the fact that small cap is a volatile segment, and usually whenever the markets are volatile, you see a lot of volatility in this particular segment, more so than maybe even mid-cap. So look for a fund which has been doing well in terms of consistency. So I think Bandhan small cap can be a better option than Quant. So just one change, and if you want, you can consider that. But otherwise, as I said, broadly the fund is good. The categories are perfect. He needs to just increase his amount, like I said, almost double of what he's investing right now.
Right, Arya, a little change, and otherwise your fund selection is great, so thumbs up to you over there. Let's move on and let's take Suresh Nair's question from Bangalore. Okay, so I really don't have all the details that he has in his office portfolio, but he says that out of in his SIP holdings, 3 of them have entered into a loss. So he wants to know if he should be booking this loss. It is advisable to book profit or withdraw some money from other funds which are in profit. So it's important for us to have Suresh on the phone line, because we want to know what kind of funds he's talking about. Even the funds are in loss, we really need to know what funds are those, because the market condition is such that we will see underperformance and NAVs would go down. So, but then just because the market condition is like that, your fund is a bad performer. We cannot translate this meaning in this way. So first, what will you tell him in order to take a stand for booking profit or exiting a fund? And yes, if he is in profit and if he needs that money, he should be booking it and maybe reallocating it somewhere else in some other market cap.
Well, Kavita, I think you're absolutely right. Look, this is a dilemma which is being faced by many investors right now. We are seeing that the markets have turned volatile over the last 6 months. We've seen, if you see from the 52-week high, the Nifty is down 16-17%. The small cap, next 50 mid cap, all the segments are down, ranging from 20 to 25, 26%. So clearly, these can be testing time for investors. But I think it's equally important to understand that when you invest in equity, equity is always meant to be a long-term investment. And in fact, we all know that by nature, equity is it's a volatile asset class. But fortunately, there are strategies. There are strategies like you have a clearly defined long-term time horizon, and if you invest systematically, you can not only reduce the impact of volatility in your portfolio, but also turn it to your advantage by benefiting from averaging. Now, as far as his decision of whether he should exit or book profit, look, like I said, the important thing is if you have clarity in terms of time horizon. If you have another 5, 6, 7, 10 years to go, there is no reason for you to book profits. As for the losses, look, whenever the markets will turn volatile, you will see the NAV getting impacted, as Kavita rightly pointed out. But important thing is the impact will depend on for how long you have been investing. So, for example, all these investors who started investing maybe 4 to 5 years ago, they are still seeing healthy returns in their portfolio. Only those investors who started investing in the last 6 months or 1 year are seeing the full impact of volatility in their portfolio. And that's why the fall is looking much bigger than as compared to someone who invested maybe 2 or 3 years. As I said, maybe most of them are still having healthy returns in their portfolio. So I think it's important for you to make sure that you have time horizon on hand. If you have another 5 to 7, maybe even longer period, please continue. The second important thing is what kind of funds you have in your portfolio. If you have a very aggressive portfolio where you've invested like significant part of your portfolio in maybe small cap or thematic or exotic funds, then I think you need to rebalance the portfolio, but remain with equity. So don't get disheartened by looking at negative return. I mean, this is something will happen every time the market turns volatile. As I mentioned, the impact will be lower the more time you give it to yourself to make your money grow. So please continue. If you have clarity that you can continue investing, and if you're investing systematically, you must continue rather than worrying about whether I should exit right now.
I would really request Suresh to, give us more details on your portfolio, basis that we can exactly tell you when to exit or not to exit. But so far, I'm sure you'll be able to arrive to a decision after listening to what Hemant also mentioned. But then let's move on and let's take Venkata Ramadu's question. He says that he's been holding mutual fund in different portfolios for last 15 years. For the last 1 month, he has stopped investing in mutual funds due to retirement. Now the mutual fund amount is decreasing for the last 6 months. He wants to know, should he be holding or redeeming the amount and reinvesting now, as most of the funds are undervalued. So a very interesting question, and again, I don't have him on the phone line, but considering that he's a retired individual and has stopped investing in last 1 month, it's very important for him, if at all this portfolio is something that he needs money from every month, he needs to secure the gains. And actually this should have been better planned, Hemant. If he knew that he wants to use this money, he should have started exiting maybe 2 years before, or even a year before the goal, if retirement was the goal for this particular portfolio. How should he go about it now?
Well, I think he is at a stage where, as he mentioned, that he will not be in a position to invest additional sums. So clearly, for him, I think the situation is a little different compared to what we just discussed in the other query, where I had mentioned that you need to invest for the long term, and you also need to continue investing through this period of volatility. But in this case, he has clarified that he will not be able to invest additional sum. But again, the second part of what I said is that as long as if he has clarity that he will not require this money, for a few years, he can continue with that. Second important aspect, which will decide what he should be doing with his portfolio, especially the equity mutual fund portfolio, is what is the quantum of exposure to these funds as compared to maybe traditional option like fixed deposits or small savings or other option that he may have. So I think for me to tell him whether he should exit or not, this obviously is the information that I would require. But what I can definitely say is that if there is a time horizon at hand, continue to remain invested. If the exposure to equity is not very high, continue to remain invested, because important thing is even after retirement, he will have to stay ahead of inflation, which means that his money has to grow in real term. Now, if this equity portion allows him to do that in the long run, there is no reason for him to really panic and exit. And as I mentioned earlier, also by nature, equity tends to be volatile. As an investor, I think we always should be ready to face this volatility. And as I mentioned earlier, fortunately, there are strategies that if you have clarity on your time horizon, continue to hold on, provided again that the quality of fund is good and the core of your portfolio is the diversified kind of portfolio or funds. If you, as long as you have that, you can continue. But of course, like Kavita said, I think the important aspect is how much time you had. And if the intent was that you needed this money, maybe you should have started rebalancing it some time ago. But since it has not been done, there's no point talking about that. From here on, the decision will depend on how much time you have.
Very important to strategize your exit also. When your goal is coming closer, it's very important, like how you had planned your investment beginning. When you are close to those goals, you should clearly know when to start redeeming that amount, or reinvesting that amount in other safe investment instrument also. Let's take a quick break, and post that we have more viewer questions. But before I slip into this break, let me flash my our WhatsApp number, where you can send across your questions, and also our email ID, where you can reach out to us, and we can help you plan your portfolio live on the show. Welcome back. You're watching The Money Show, and we are doing our viewers live financial planning. I have with me Hemant Rustagi as a guest on the show today, and let's connect with our next viewer, Vikramjeet from Dharamshala, Himachal Pradesh. Vikramjeet जी, कैसे हैं आप?
ठीक है मैम, नमस्कार मैम।
नमस्कार सर, हालचाल ठीक है? खबरों में मौसम काफी खराब है पहाड़ी इलाकों का।
हाँ, बारिश हो रही है, हल्की फुल्की बूंदाबांदी हो रही है मैम।
बिल्कुल, चलिए ख्याल रखिए अपना, अपने परिवार का। आपकी डिटेल्स मेरे पास हैं विक्रमजीत जी, पोर्टफोलियो की। कुछ और आपने ऐड करना है? कोई सलाहकार है आपका जिससे आपने सलाह ली है? कोई एडवाइजर है क्या?
नहीं, आप लोग का चैनल देख के ही मैंने खुद से किया हुआ है। चलिए,
धन्यवाद चैनल देखने के लिए। और ठीक है, बताते हैं आपको क्या करना चाहिए इस पोर्टफोलियो में। 13 साल तक आप इसमें निवेशित रहेंगे। कोई कॉर्पस जो आपको एक्यूमुलेट करना है, इकट्ठा करना है?
नहीं, कॉर्पस नहीं है। जो इसमें हो जाए, मैं 10% सलाह में स्टेप अप करूंगा। जरूरत पड़ने पर मैं और भी डाल सकता हूँ, लेकिन कोई टारगेट ऐसा नहीं है कि वो हो ही जाए अचीव।
कोई फाइनेंशियल गोल से जुड़ा हुआ पोर्टफोलियो ये नहीं है?
जी नहीं।
ओके, ठीक है, वो क्लैरिटी मिल गई। आपको बताते हैं क्या करना चाहिए। सो हेमंत, या ओवर टू यू।
कविता, आई थिंक 2-3 चीजों में यहाँ पे क्लैरिटी है। एक तो उन्होंने कहा कि उनकी जो SIP है वो 17,000 है, and he's investing in 8 funds. Clearly, there is a case of over diversification. Funds have to be reduced. But he's also committed to step up his SIP by 10%, and his time horizon is 13 years. So I think there are a couple of good things here. One, I always believe that whenever you're investing through SIP, if you remain committed to step up your SIP every year, you bring in discipline into your saving process as well as investment process. So which means that a part of a growing income also goes into investment. So I think he should continue with that strategy. If I assume annualized return of 12%, he should be able to build a corpus of around 1.15 crore. So since he doesn't have a target, so I mean, this is the kind of amount that he can accumulate through his SIP. If I look at the portfolio, like I mentioned earlier, there are 8 funds for SIP of 70,000. Clearly, there is a need to reduce the number of funds. So to begin with, there are 2 large cap funds, Canada Robeco Blue Chip Fund and also ICICI Blue Chip Fund. In both of these, he is investing 2,500 each. Because he also has Flexi Cap Fund Parag Parik, which is investing 5,000. I think he can reduce his exposure to maybe around 3,000 in one fund, which can be ICICI Blue Chip. So one large cap fund, ICICI Blue Chip 3,000, Parag Parik Flexi Cap Fund 5,000. For the other funds, like he is investing 1,500 in a small cap fund. I believe that for this kind of portfolio, he can consider investing in a multi-cap fund. Fortunately, he has invested 50,000 in Kotak multi-cap, which to my mind is one of the best multi-cap fund in the industry. So what he can do is he can invest 6,000 in that, which means that he will have exposure to mid-cap, he'll have exposure to small cap, and also exposure to large cap. So one change here that he should start SIP of 6,000 in this. And I would like him to include the good quality mid-cap fund in the portfolio, which can be Motilal Oswal mid-cap, where he can invest 3,000. So one new fund, reduce the number of fund to 4 overall, one large cap, one flexi cap, one multi-cap, and one mid-cap. That's how I think you should revamp this portfolio.
विक्रमजीत जी, आपको सलाह समझ में आई? कुछ और पूछना चाहते हैं?
नहीं, मुझे थोड़ा ब्रीफ कर दीजिए मैम, इसलिए कि मैं आवाज थोड़ा इको हो रहा था, मैं सुन नहीं पाया, मैं रास्ते में हूँ।
अच्छा, वैसे हमारा जो शो है वो हमारे YouTube पर जाता है। अगर आप YouTube पर हैं तो ET Now के आप YouTube पे जा सकते हैं, वहाँ पे आपको वापस से सलाह आप सुन सकते हैं। तो जो भी चेंजेस हैं आप वहाँ से सुनकर आप उसको अमल में लेकर आ सकते हैं।
YouTube पे ET Now का कौन सा पार्ट देखना पड़ेगा आज के डेट का?
हाँ, द मनी शो देखिएगा, तो हमारे हर रोज के शोज वहाँ पे डाले जाते हैं, तो आप ये शो भी देख सकते हैं, आपकी सलाह भी उसमें शामिल होगी। थैंक यू विक्रमजीत जी, थैंक यू। All right, let's move on, and Hemant, let's take Kailash's question, and he's got an equity portfolio of 50 lakhs, and in the current market scenario, he needs to encash all the funds in available profits. Is that a good strategy? Again, we don't have him on the phone line, but if he really wants to, if there's a need for the money and the investment horizon is not planned, what will you tell him?
Kavita, the key factor is, as you rightly mentioned, I think whether there is a need for the money or not. So if there is a need for money, I don't think we have any option. But one thing that can be considered is to maybe look at his entire portfolio. And if there are some other investment, maybe there is some investment in other option where maybe the money is locked and there is some kind of penalty to exit. Even that can be considered, because if the intent is to take out some money and there are other options available where he hasn't seen this kind of fall in the market value, I think it can be a good strategy to consider that. But if even those options are not available, then two things I would like to say. One, for anyone who is trying to build a portfolio, investing primarily in an equity-oriented mutual fund is never a great idea. There is something called asset allocation we should always follow, because in times like these, when you need money and the markets are down, you actually end up either kind of losing out on the profit that you had earlier, or maybe sometime even losing a part of your capital. So I think it's important, but the decision obviously will clearly depend upon whether the money is required or not. If the money is not required, as I mentioned earlier, if there is a clarity in terms of time horizon, at least another 3 to 5 years are there, he can definitely continue, provided again that the portfolio is not very aggressive. There are good quality funds in the portfolio.
All right, let's move on and let's take Sanjeev's question. And he says that he's 61 years old, has a corpus of 95 lakhs, UTI Nifty 50 index 5,000 rupees, SBI small cap 5,000, Mira Asset large and mid cap he says is 2,500, Parag Parikh flexi cap 10,000 SIP, and Kotak emerging equity 10,000. And he wants to know if he can continue investing in these funds. And okay, so he's also sent mutual funds of this is his portfolio, and then I think more 2 portfolios, SBI small cap 5,000, Parag Parikh flexi cap and UTI flexi cap 5,000 each. And SBI small cap, SBI large and mid cap, PPF, I'm assuming it's, PPF he's investing 3,000 over there, and Axis mid cap 5,000. Okay, so I don't know what's the time frame, because here it looks like 3 different people and 3 different portfolios. What will be your recommendation? We don't have enough details though.
Kavita, since we don't have clarity on time horizon, but considering the fact that all this money has been invested in an equity fund, maybe we can assume that he has time horizon, time on hand, so that he can continue to remain invested in equity. If that is the case, then I would say that in his own portfolio, 2 changes. One, there is a small cap and SBI small cap. I believe there are better options. One of the options that I think I've discussed earlier also in the show, which is Bandhan small cap, you can look at. And then Mirae Asset large and mid. I believe that Motilal Oswal large and mid can be a better option. In the second portfolio, again, I think there are 2 funds. One is UTI flexi cap. The rest of the funds are fine. I'm talking about the funds where I feel that he needs to consider making a change. So this is UTI FlexiCap, where again another fund in the large and mid cap category, which is SHBC large and mid cap. We can consider that. And again, in place of SBI mutual fund, another small cap fund, which is Invesco small cap fund. The third portfolio, there is a SBI small cap fund. But looking at the composition, I believe that a multi-cap fund can be a better option. And we talked about this fund too earlier, which is Kotak multi-cap fund. So in place of SBI small cap, if Kotak multi-cap can be there, I think it'll bring the right balance in the portfolio and maybe improve the chances of better return from here on.
All right, and with this, it's time to end the show. Thank you so much, Hemant, for being on the show and helping our viewers with their financial portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.